So essentially they're saying the more confident the buyers, it's going to bring more buyers into the market, and they say that price rise are the inevitable outcome of this. Understand that things are looking good according to CBA and according to a lot of other analysts, but you still need to make sure that you create the right strategy, create the right plan, and get out there and invest safely.
I walked into the office this morning to one of the most interesting emails I've ever read, certainly making my day feel better.
Oh, me too, no doubt about it. Wowee.
So what we've got is a really interesting update from CommBank Australia just in relation to their thoughts on what's coming in the Australian market over the next few years. It talks to the number of new mortgages, sentiment, spending, interest rates, and their forecast for each capital city in Australia. So Simon and I are super excited to bring you some of this information early so that you can make better and smarter decisions over the next couple of years.
When you walked in this morning, it was so funny. He comes in, he goes, "Bro, I've got a present for you." And I'm like, "What do you mean? What are you talking about?" And he hands me a couple of pieces of paper. I'm like, "Oh, sick present." Read it. And I'm like, "What? That is actually one of the best presents I've ever received."
One of the boys in the office, Hayden, who's also a previous client of ours and an accountant, was literally skipping around the office this morning. He was so excited by this update. Now, we don't really have an opinion at Pumped on Property. We just share the news of what we're hearing from the likes of the CBAs and the SQMs and the Westpacs and the Mac Banks and the Phil Andersons of the world. Now, this is probably, I've been doing this now in terms of learning about and researching property for 11 years. And this is the most bullish piece of information I've ever received. And I'm like, well, CBA has a lot to lose by presenting this information publicly like it does.
Yeah, there's no doubt about that. And it's just consistent positive news, consistent positive sentiment that's going to give everybody that confidence. And, you know, even though we're reading these updates from the pros and the big dogs, but, you know, we're feeling it in the market at the moment as well. And we're seeing it up here on the Sunshine Coast in particular. So
more buyers, more confidence. Houses are selling for higher amounts. Houses are selling faster. Absolutely no property in Southeast Queensland for rent at all. People's rent's going up by as much as $10 to $100 a week at the moment. It's quite crazy.
Yeah, and it's also a little bit easier to secure finance. You know, I'm already going through the process of refinancing, and it's just absolutely ridiculous the rates that I'm getting. It's blowing my mind, and then still increasing my serviceability at the same time as well. So it's just a lot of different things going on. But you know, essentially the first paragraph in this particular update that we got is the housing market is on the cusp of a boom. New lending has lifted sharply. Dwelling prices are rising briskly in most capital cities, and turnover is significantly up on a year ago.
Now, what they go on to say is that auction clearance rates are sitting at levels consistent with double-digit price growth, which we're finding now a lot of people don't buy at auction in Brisbane. That's not the normal way that they go to market, but we do follow the DSR score, and the DSR scores have all jumped to about 65 to 80 out of 100, which represents an extremely, extremely hot market. Now, I'm so grateful that I've spent the last 5 years building the relationships I have now in Brisbane, because as the market's increasing in value, it's meaning I'm still getting access to pre-market, off-market listings, and then looking every single day online as well, you know, rather than looking in the afternoon, for example. It's just been really helpful to pick them up before anyone else does as well.
I believe in a hot market, it's one of the most important things to have when you're looking for a property, whether it be your own home or an investment property. You need to have those relationships with the top performing agents. You know, we talk to friends and family that are looking to get into the market themselves. And the first thing that we're telling them at the moment is figure out your suburb, then call all of the local high performing agents and try your best to build some rapport with them, because good properties are selling within a couple of days at the moment.
We're going to be doing a podcast after this one actually over at the Pumped on Property show, which is on Spotify and Apple as well, about exactly that, how to find the right suburb and how to take advantage of that in the current conditions Australia-wide that we're seeing at the moment.
Now, CBA go on to say that the boom is being driven by record low mortgage rates coupled with a V-shaped recovery in the labour market. I noticed that heavily up here in Queensland because restrictions didn't last very long up here in Queensland last year in 2020, and people got back to business real quickly. People got back to jobs real quickly.
You know, there's two types of things that happen when we hit a recession point. You either get the quick and sharp dip and the quick recovery, or you get the sharp dip, the long recovery, and then slowly back up. And so the best case scenario for Australia would have been this V-shaped recession recovery, which is what CBA is suggesting that we're coming out of. And that's really, really powerful. It's so funny, like we expected things to be really, really bad for a long time in Australia as a result of this. And CBA even puts their hands up and said, last year at the start of the year, they were expecting the same thing, but we're starting to see the signs of unemployment rates going down. In a previous update, they said that they'd be at 5% by the end of 2022, which is back to absolute gold.
Exactly. Now let's get into the nitty gritty. Let's talk a little bit more about their forecast. So essentially they're coming out and saying that they expect strong price growth in dwelling values Australia-wide over the next couple of years, with the potential to increase by 14%.
Now that's Australia-wide, and they go on to say that there'll be winners and losers. They're expecting Sydney and Melbourne to have modest growth, but still very, very strong, where the likes of the Hobarts, the Brisbanes, the Perths, the Adelaides, the Darwins and the Canberras having extremely strong predicted growth in the next couple of years.
They're also saying that they expect the price growth to be stronger for houses, so standalone houses as opposed to units. So I think this is natural to understand, especially when you think about what COVID did. A lot of those inner city apartments, people just didn't want to be on top of one another. People were scared to be close to one another. So they want a little bit more space. They want a little bit more land. And this might be one of the reasons.
And that's consistent with the data that we've got from CoreLogic, where they looked at houses versus units over the long term. And they found, I think, houses had outperformed units across Australia's capital cities by about 96% over the last 25 years.
Exactly.
So it goes on to say that what they've seen, like there's a couple of indicators to keep an eye on. One is easy and cheap credit, like we've talked about before, which we're seeing. We're also seeing a relaxing of the Royal Banking Commission criteria and the big picture, like stuff that really turned the screws on the lending market a few years ago, or from 2016. But what they're seeing is a rapid rise in new lending. Now, they go on to show some data between 2003 and now. And what they do is they look at the number of loans being written versus the capital gains. And to be honest with you, it looks like such an early indicator. So when the number of new loans being written comes down dramatically, generally we see house prices coming down or stabilizing. And when we see the number of new loans increasing rapidly, we generally see short to medium term price growth. Now, when you look at Brisbane and Perth in particular, the number of new mortgages has just gone absolutely through the roof.
Absolutely. And it's coming from all sectors of the market. It's coming from owner-occupier finance, investors, and first home buyers, which it's good to see a nice, well, not so much a balance between the three, but all of those increasing at a very rapid pace.
Now, they said the effect of the lower interest rates on the market is threefold. Firstly, lower interest rates means that somebody can essentially borrow more money, which makes sense because the serviceability requirements aren't at 7% like they used to be. The second thing is it means that the rental yield an investor will tolerate is better. So let's say that you've got $1 million asset, for example, renting for $50,000 a year, or $1,000 a week. Basically, if you've got $800,000 debt on that property at 3% per year, it means that the interest you're paying the bank on an interest-only home loan is significantly below the rent you're receiving, and therefore this is encouraging a lot of extra people into the market. The third thing that they said about lower interest rate is it shifts the attractiveness from just renting to owning your own home. Now, I got into the market in 2011 because at the time it was actually cheaper to buy than it was to rent. And after 10 years, we've finally got back to that same point where I'm talking to so many people, they're like, I could buy right now, it'd cost me $350 to $400 a week versus renting, which is costing me $500.
So let's logically think about that, So if you're renting at the moment and, previously you haven't been able to service a mortgage, maybe now you can, and it's actually more affordable for you to pay your mortgage than it is to rent. And then you've also got an asset that's appreciating in value at the same time. So, this is what gives a lot of people the confidence to move forward and take that risk and jump into the market, which once again compounds the impact.
I've talked about this before, but Aussies absolutely love a winner.
Love a winner.
Love a winner. You can look at third grade Indian hockey team that's doing well, and you'll find 100,000 Aussies betting on it. You know what I mean? It's just something about our nature. It loves to make easy money as humans. You see this in Bitcoin, you see it in stocks, you see it in gold, you see it in property. It's the same people flocking to the easy money. Now, momentum is strong at the moment, and that's a really important thing. Momentum, according to CBA, creates more momentum. When that winner is winning, more people jump on the horse. Now, after looking at Sydney, Melbourne, Brisbane, and Perth, and looking at 50 or 60 years worth of data year by year, what Ryan and I from On Property found is that when a suburb or a capital city does an average of 10% in 1 year, there's a 65% chance in the second year after that we'll see another 10% growth year. And then there's a very, very high likelihood that we'll even see a third. So one of the key indicators I've been talking about on camera for 3 or 4 years now is that piece of information. And when we see the surge this year and we see Australian property prices Australia-wide gone up by 10%, we will see a huge amount of money come out of the stock market and back into properties as people race into that easy win.
So essentially they're saying the more confident the buyers, it's going to bring more buyers into the market, and they say that price rise are the inevitable outcome of this.
There's this guy that I won't mention his name that has basically been reaching out to me for the last 5 years that I've been in this business, and he's from the ACT. Every single time the market's good, I get a message from this guy or an email basically saying, hey mate, what are your thoughts at the moment? And then every time it's bad with an election or COVID or the Royal Banking Commission, or the making money really hard to get in 2016, he just disappears like that. And so I just call it like the Marty effect. And, you know, most people in Australia are Martys. They just, you know, jump on the bandwagon when it's good and then disappear when it's not good. And, you know, it's interesting.
The winners are always going to be the people that have the confidence to get into the market and buy the assets. And this is what Phil always talks about it. The gains are always going to end up in the landowner's pocket.
Without a doubt. So the next interesting thing, which I just can't believe they've actually put into paper, is CommBank went on to say, how far and fast will prices rise? Now, they sort of go on to say that national property prices to rise by around 8% in 2021, 9% for houses and 5% for apartments. And we forecast dwelling prices to rise by a further 7% for houses and 4% for apartments in 2022. Now, I just have not read anything like this in the last 10 or 11 years I've been investing personally.
Exactly. And they say the effect of record low mortgage rates on dwelling prices is expected to wane a little in 2022. But then they go on to say the other way will be expected a lift in population growth as the international borders are reopened, which will boost the underlying demand. So nice little balance there in 2022, we'll see.
Now, regardless of where you're investing in Australia, it looks like it's going to be solid. But, you know, they're expecting 13.7% in Sydney in the next 2 years, 12.4% in Melbourne, 16.6% in Brizzy.
Nice. Then 15% down in Adelaide, 17.7% in Perth, which is the highest. 15.5 in Hobart, 18.7 in Darwin, which the Darwinites must be pretty happy to see that, man, because it's been a rough few years.
Hard 40% drop before they get this back.
And then Canberra with a 15.5% increase over the next 2 years. So things are looking really good all over Australia, guys, which is absolutely amazing.
When I think about Phil Anderson and Fred Harrison's work, they've always said that in the second half of the cycles, the secondary cities like the Brisbanes, the Darwins, the Perths, the Adelaides seem to do better. And it makes sense because up until this point in 2021, Sydney and Melbourne still have increased by, 70 to 100% in the last 10 years, where, Perth and Darwin are significantly down and Brisbane's still in many pockets cheaper than it was to buy 10 years ago, or now than it was 10 years ago, according to CoreLogic. So really interesting times. I'm glad to be able to bring this information to you. I'm so grateful that CBA is putting this stuff out. We, in terms of what we're personally doing, is just setting ourselves up to take advantage of it safely and slowly. We're certainly not rushing out there and just grabbing stuff because we think it's going to do well. We're just continuing to move forward with our strategy, with our plan, and executing that one step at a time.
As I said, there's definitely going to be winners and losers throughout this. So you still need to make sure that you create your plan, you focus on the right strategy. Even though this says that everywhere in Australia is going to do well, you still definitely need to focus in, a particular location. And, we really love Southeast Queensland at the moment. It's where we're based and buying properties for ourselves and our clients. Things look really, really interesting over here. So, just make sure that you spend the time looking at everything. Because one of the things that I find when I talk to new investors or people that are looking to get into the market, I'm like, cool, so what have you been doing? Where have you been looking? And they're like, oh, well, I've been looking in Adelaide. I've been looking in Perth. I've been looking on the Gold Coast. I've been looking in Byron Bay. And I'm like, cool, no wonder you're feeling overloaded and paralyzed by analysis, because you're looking so broad. So, understand that things are looking good according to CBA and according to a lot of other analysts, but you still need to make sure that you create the right strategy, create the right plan, and get out there and invest safely.
Without a doubt. So for those of you who like the idea of buying at the bottom and riding a market up over the next 5 or so years, or like us, the next 30 years, hopefully, we'd like to offer you a one-on-one strategy session. Just jump over to www.pumkedonproperty.com, book a time in with myself or Simon, and we can talk about where you are, where you would like to be in the future. We can look at the marketplace. We can share a lot more information like this with you, and then you can take that information and go and smash it on your own if that's what you want to do, or become one of the small number of people that we work with each month to help buy really good quality houses, or really good quality houses with secondary dwellings or granny flats in the Brisbane region.
If not, please share this video with somebody that you think will find it super interesting.
Oh, sweaty, so sweaty.